I'm back again with another video. So on this video, I will be basically showing you and going through pending orders, which is the things that we use to execute trades, right? So I felt like I needed to do this because a lot of people, I feel like they struggle with entries. It's not that they don't know their technical analysis or any other elements of technical analysis. They sure do know their basics. But the issue is that they don't know when it is the right time to enter. They don't know which pending order must they use, whether it's market execution, buy limit, sell limit, buy stop, and sell stop. And I will actually get into that now, and also how you can apply that on your trades, right? Because sometimes I find that a lot of people do miss their opportunities or the trades that they had planned out. Not that the market didn't go into that direction. Yes, it did go into that direction, but it's just that the problem was on the issue of they missed out on them or they were not there, or you know what I mean? So I will first get into the very first one, which does not have a twin, which is market execution, and also to explain under what circumstances or what conditions must you use it. So if you're somebody that, if for example, you are on your way out and you know that you're not going to have the time, actually, no, it applies to all. If you know that you're not going to be there at home, or you're supposed to leave or whatever, then you can use market execution so that you do not miss out on that particular trade, right? And also, if you have the time to watch the market, or if you have like plenty of things to do, then you can use a market execution like that moment at that time. And also sometimes you can use a market execution under circumstances which all the confirmations line up. For example, if we can talk about that now on US 30, you would realize that I did say on the analysis video, if you did not watch that video, do check it out. I did say that because the market was somewhere around about here, somewhere around these areas at the time. So I did say that the market could want to come back to the support level before it actually gives us the buys. Or if it does break this trend line and this resistance, then that's when you know we're going to start having selling opportunities. But I did highlight the fact that this is one of the patterns that I know that they always play out. Right. So in a circumstance like this is a pure, clean chart, right? So you would use a market executions here for these reasons that I'm going to give you now. The first reason you could have used a market execution would be the fact that we have this reversal structure that I did talk about on the previous video, which serves as a reversal pattern, right? Then the second one, you would realize that we have an inverse head and shoulders here. So in circumstances like this is also a reversal pattern that I always look out for. So that's the second reason why you could use a market execution. Then a third reason why you could use a market execution is based off the fact that we have this small level here that the market has now broken, because this was now acting as a support. And the market has broken that level of resistance now with a nice bullish engulfing candle. So that's a breakout. That's number 4, if not 3. Right? I hope you're keeping count with me. Then the fourth reason, or the fifth one, look at the type of candles that formed there. It's support. I did share on the video about candlestick that if you see a hammer like this at support, do not hesitate to enter that trade, because this is a reversal pattern. And it also shows that if the momentum is with the buyers, then you must buy that market. And then the icing on the cake now is this bullish engulfing candle. That is a nice bullish engulfing candle. And I did say on the previous video that when a candlestick has that much body, then there's a lot of momentum that is there. So that's the fifth reason why you could have used the market execution now on a MetaTrader 4. Then the last one is that, or the sixth one is that I did say that when the market is broken out of a structure, keep note of how it's moving outside of that structure. For instance, what I normally notice that when a market is reversing and is going to start going to the upside, I'll pay attention to this type of things, because look at this: higher high, higher low, higher high, higher low. And then what's next is going to give us another higher high somewhere there, or even at that resistance. So these are the type of conditions in which one could use a market execution. So with this all type of confirmation that I have just given you, why would you not then enter a buying position? There is actually no reason why. So this is such a scenario. This is a kind of scenario in which you could have used a market execution, because we have this is a beautiful structure, guys, right? So this is a market execution, which is you are saying to the broker, activate this trade for me now. Then you put in your lot sizing, your stop loss or take profit. So the likelihood that I'm expecting here on the US trade, which is the Dow Jones, is a bullish movement to the upside, right? So moving on now, let's go to buy stops and sell stops. Let's go to buy stops and sell stops. So I have a one on, let's see, right? So what is a buy stop, guys? Right? So, okay, let's first get back to basics. A pending order is you saying to the broker that when the market reaches a certain level, it must activate you into the trade. That's what it means. That is a pending order. So when we're talking about buy stops and sell stops are, if you can think about this the way I'm thinking about it, buy stops and sell stops are more compatible with continuation patterns, or a market that is continuing in the direction that it actually came from. So a buy stop would be something that looks like this. You have a level of resistance. You have a market that is coming to the upside like this. So what is a buy stop? A buy stop is you saying to the broker on your MetaTrader 4 platform that should the market reach this price level, which is 19,000.00, it must activate you into the trade, because you are expecting that the market is going to go to the upside. So immediately this market breaks this resistance, gives you a retest, then that's when your trade is going to be activated. It does not even have to give you a retest, because this is the same thing. If the market was somewhere around about these areas, then when you put a buy stop, it would be another way of saying to the market or to the broker that when the market reaches 18, if you look at the black numbers, when the market reaches the price 8960.59, then it must execute you into the trade. That is what is called the buy stop. You can use this type of things. For example, if you know that you're not going to be at home, you're not going to be at home, like you're not going to have the time to keep watching the market until it gets to that particular level. Or sometimes you have a lot of things that you have to do. You're probably studying, you work a 9 to 5, but then this type of pending order, which is a buy stop, is going to help you in such conditions, because you not necessarily have to be there by the time the market reaches that particular level. And with technology advancing today, is that there's also things called alerts. There is that option here on TradingView where you can set an alert that should the market reach that particular level, it must execute that trade on your behalf. The procedure is still standard. You set your entry level, your take profit, your stop loss, and then you forget and let the market do what it can do. So for example, if you look at this, Bitcoin has this previous low right here, right? This previous high, I'm sorry. And then if you look at the structure, the market is forming what? Higher highs and higher lows. Look at this. Okay, we can erase that. Higher high, higher low, higher high, higher low. And if you look at this, we can also have a minor support level over here, right? And look at the type of candles that are forming here. That's a doji-like type of thing. And we have what they call this, a pin bar, which is also known as a hammer. So in case of a buy stop, you would then say to the market, if you're not gonna be there by the time the market reaches this level, then you're gonna say in your options on the MetaTrader 4 that you're gonna select the type of pending order that you're gonna use. which is a buy stop in this case, then you're going to say when the market breaks this price point in 19,454.67, it must execute into a trade, but only above that particular thing, which is you can let it break it, and then when it comes back for a retest, then you can enter your trade, right? So a buy stop, you use it like that. So if you know that you're not going to be there by the time the market reaches that level, then you're going to say, add to this, let's see the primer, let's just take in a random price. You can say that at 19,500, at 19,500.63, should the market break that level and then go above it, which is tens now into support, then that's when you're gonna, the market or the broker must execute that trade for you. Then you're gonna put in that entry point on your entry, then put in a stop loss and you take profit level. And another important factor that I forgot to mention is that, like I said, that buy stops and sell stops are more compatible with a market that is continuing with the direction that it's headed to, which is take what I usually say on the continuation patterns and you incorporate that with this pending orders, which is a buy stop and a sell stop, right? So this is a pure example of what a buy stop would look like. So excuse me. Also, this is a type of pattern that I'm seeing over here, right? So should the Bitcoin outperform the dollar and indeed go to the upside, if you had set the buy stop at that price point, I say 19,500, then it's going to execute, it's going to trigger you. That's the right word. It's going to trigger that position for you. And then if it goes into that direction, it will go into it. Then you set your TP. If it hits your TP, you take your profits and then you move away. So that is a pure example of a buy stop. And another thing now, when it comes to buy stop, a buy stop breaks a resistance, turn it into support. So you're basically buying the support level. That's what it means, right? So this is the, and then the other one that we have is a sell stop. So let's go for a sell stop. I think I saw one on USD Swiss francs. Nice. So let's get to it right now. So if you look at USD Swiss franc right now, so a sell stop is the opposite of a buy stop. So a sell stop, you have a resistance level, you have a market that is coming from this direction, right? So a sell stop would be you saying to the broker that should the market break this support level and hit this price 0.96744, then it must trigger you into the trade. So, right, when the market finally reaches that level, then you will be triggered into the trade, even without your presence. Basically, you do not have to be there, right? That's why I said that you can use these things. If you're somebody that knows you have a lot on your plate, you have a family, you have a 9-to-5 job, and then you're not going to be there by the time the market gets to that particular level. Or if you're a swing trader, sometimes you do not have to wait until the price gets there, right? So a sell stop would be a market that breaks a support level and turn it into resistance. Then it's going to trigger you with any price that is below that support level. Let's say, for instance, that price level is 96,728. Then when you do that in a MetaTrader 4, you're going to select the pending order sell stop, and then it's going to be 96,728 on your entry point, and then you set your what do you call this, your stop loss just above here, that of course above your entry point if you're selling, and then you're going to set your TP target, and then that's how you're going to use it, right? So that is what would be a sell stop. So a better example, for example, now let's look at what's going on here, right? So if you look at USD Swiss broke out of the structure, and then it broke out impulsively, but it's now playing between that support and resistance level. So if we are anticipating that USD Swiss francs is still going to continue being a sell, then we would use a sell stop on the fact that should the market break this level and then hit this price point 0.96977, then you're going to say on your entry point, if you're expecting it to continue with the sells, that on your entry point, you're going to select like your sell stop, and then you're gonna put this 9697 as an entry point, then you put your stop loss, and then so when the market reaches that level, it's gonna trigger you into the trade without you having to do it manually. So that's what it means. This is what a sell stop would look like. Like I said, it's compatible with the market that is continuing on the direction that it is headed to. So that's why I'm relating it into continuation patterns, or a market that is continuing with that particular direction, right? So the last two pending orders that we have in the market is your buy limit and your sell limit. I hope you liked and enjoyed this video. And like I always say, abuse that subscription button. I will most definitely see you on the next video.